Good morning, everybody. We're just going to wait a few seconds for everybody to filter into the webinar and then we will start. So good morning and thank you for joining us this morning for Volpara Health's half-year results investor webinar. We are joined today by CEO Ralph Highnam and CFO Craig Hadfield, who will be doing the presentation this morning. If you do have a question, you are able to ask that via the Zoom Q&A facility at the bottom of your screen in writing. Alternatively, you can send an email following the webinar today and we will get back to you also via email. So I will now hand over to Ralph, who will commence the presentation. Thank you.
Thank you, Hannah. Hello, and thank you for your time this morning to hear about our strong results for half year 2022, which ended 30th of September 2021. Volpara is a health technology company whose integrated breast care platform assists in the delivery of personalised patient care, and whose business model is predominantly based on software as a service or SaaS. And we're on a mission to save families from cancer. But much to cover today, including the half-year results, which showed a near 40% jump in revenue in constant currency terms, whilst continuing to show improved net loss. And we're going to cover off some business outlook and some of the key events coming up for us over the next wee while. I'm joined today by Craig Hadfield, our Chief Financial Officer based here in Wellington, and we'll both be available, as Hannah just said, for questions at the end of the main report. Okay, before I hand over to Craig, let's just talk about impact we're having on people's lives around the world, a topic which is very close to the hearts of many of our staff, stakeholders, and increasingly now investors. 13.4 million US women are being helped by us to have safer, more comfortable, more accurate breast cancer screenings, along with tens of thousands of women now across Australia and New Zealand. We've also continued our global reach, working now with luminaries and other researchers around the world, including many developing countries, to help them understand their populations and what optimal breast cancer screening might look like for that population. As an example there, we've just signed up a research user in Mexico, taking us to 40 countries now around the world, where we've either sold products or done research. Those numbers and that impact will only increase as we continue to not only develop new products, but continue to do the major trials needed to have significant impact in the bigger population screening programs, with the best example being the 10-year randomized controlled trial Project DENSE over in the Netherlands, which showed a really significant reduction in interval cancers in women selected for breast MRI by Volpara. Those trials continue at pace, and we have 9 abstracts coming up at RSNA, which is our big trade show in Chicago, which starts at the end of this week. And those abstracts cover everything from quality of positioning through to predicting cancer tumor types based on their breast composition. And we look forward to summarising those along with updating you on RSA in general over the next few weeks. With that, over to you, Craig.
Good morning and thanks, Ralph. I'm now going to summarise our financial results for the first half of FY22 that was ended 30 September 2021. I'll start with a recap of our SaaS metrics, which we spoke about during our 4C a couple of weeks ago. Please also refer to the results presentation on ASX for a further deep dive on some of these metrics. At the end of our half year, our annual recurring revenue was sitting at 20.4 million US. That's up from 18.6 million at the end of FY21. That's up over $1.8 million in the first 6 traditionally quieter months of the year, and also included a record quarter for new ARR. Our market share has increased from just over 32% at the end of FY21's financial year to over 34% at the end of September. That market share, remember, is the percentage of contracted sites in the US which have at least one Volpara product. The ARPU, or price per woman, ended at $1.46 US for Q2, up from $1.40 US at the start of the financial year. And given the size of some recent multi-product deals, that again shows the potential for further upselling into our installed base, especially those sites who originally bought on capital with very low recurring revenue components. We're also excited about some of the new initiatives playing out in the space, including Volpara Club and Analytics in Action, which Ralph will touch on a little bit later. Now let's turn to the more traditional accounting metrics reported in the half-year financial report up on the ASX. Accounting revenue from customers was 12.3 million. That's up 30% on the same period last year, or 38% in constant currency. Importantly, 96% of that revenue was recurring in nature, with now only 4% being capital. The recurring or subscription revenues increased by 35% over this period to 11.8 million, or 42% in constant currency. These results are due to our relentless focus on subscription-based contracts. We do realize that this may come at the expense of short-term accounting revenue or the related cash benefits, but with a low churn rate and our proven ability to upsell into our installed base, we believe this focus stands the business in good stead as we progress. Looking deeper into our installed base, our single largest customer makes up only 2% of our ARR, meaning we are not solely reliant on any one specific customer, whilst at the same time it provides us with a large install base to upsell into. Gross margins have stabilized around 91 to 92%, meaning our gross profit also increased 30% from 8.7 million in the prior period to 11.3 million now. Operating expenses increased 20% compared to the prior period. However, remember, this does include CRA's cost for the first time. If you exclude CRA's cost, the existing business's cost base actually reduced by 4% on a constant currency basis compared to the prior period, showing the underlying scalability of the existing business's cost base. Normalized non-GAAP Ebitda, which excludes one-off and non-cash items, has improved from a loss of 6.6 million last year to 6.4 million this year, or a 4% reduction. This is also in line with the accounting net loss, which has also reduced 4% from 8.9 million to 8.5. If we look at the balance sheet as of 30 September, the company had a little over $25 million of cash on hand. And our guidance for the revenue for the full year between 25 and 26 million remains on track. And with that, I'll hand back to you, Rolf.
Thanks, Craig. So look, we're obviously now into the busiest quarter of the year for Volpara and heading towards RSNA, our big trade show in Chicago at the end of this week. That show will obviously be much less popular this year than in previous years due to COVID, but experience so far with US trade shows is that albeit the numbers are down, they're actually attracting very high quality leads and allowing excellent B2B time. So we're very much looking forward to get over there to Chicago and talking to many people in our community as things start to start back up again. That's going to start this Sunday. We'll be running photos of our staff booth and talking through all those abstracts in due course. Please do watch social media for live content, and we'll summarize the whole event for you via the newsletter after probably sometime December, January. Now, at that show, we're going to be launching several things, one of which is Analytics in Action, which is an add-on service to one of our best-selling products, Volpara Analytics. That's going to increase stickiness even further and in time increase ARPU. It's a collaboration with a group called Mortgage Educators over in San Diego, allow sites to seek further specific expert help on quality should they need it. And the idea is that those trainers will go in there fully understanding where the issues are based on the results of analytics, and then we'll be tracking performance improvements in those specific metrics over the next wee while after training. So it's going to be really interesting to watch, and it's going to be a very powerful tool to really improve quality and therefore improve cancer detection. We're also going to be building on our long relationships at RSNA with River Mavis and Reveal.dx, all appearing alongside us on the booth, and continue to build our presence and profile in that space, which is seeing growth, of course, as governments launch and or expand screening programs, and which we talked around a few weeks ago about how we're starting to position for growth in that space. And our initiatives coming up early next year include launching a Volpara Users Club, which is really formalizing and building up of a Volpara community of users globally. Well over 700 customers now, thousands of people using our software. We really do have a large community now to start bringing together, and we want to really start leveraging network effects over this next period to get users effectively buying from other users. And the key to that, of course, is smooth IT, and careful coordination, both of which we can now offer, especially given the size again of that user base. And I'll just note here that we're very pleased to have Terry Thomas ramping up her role with us. She's a former executive at Epic, and she'll be helping drive uptake of our products into the electronic health record companies, as well as helping us plan future products using the EHRs as cost-effective channel partners. Those EHRs also have outstanding user groups, which we're looking to replicate with Volpara User Club. Let's now switch and talk a little bit about data. And we have rights to use the data which flows into our products for product development. And we currently have over 50 million mammograms from over 5 million unique patients stored in the cloud. Those mammograms come from a wide range of X-ray machines running in 2D, 3D, and so on. A wide range of populations and increasingly are being linked up to health outcomes. And not only is that going to really open up the door to a range of new powerful analytics tools that we can do in the cloud, it's also going to power a range of new AI clinical tools as we seek to change the overall paradigm of screening from detection through to prevention. Now, to illustrate the power of that data set again, most papers at RSA will cover clinical trials done on hundreds or thousands of patients. Our aim is to move the needle and conduct trials and produce products based on millions of patients. So we are moving into a different ballpark compared to all our competitors around this space. And that's based on the power of our platform and the data that we are collecting. And you'll be hearing more about that as we go forward. Finally, of course, I'm just going to note here that we are constantly talking to people around where the FDA is on their breast density legislation. Most recent report we received in October had the FDA talking about working diligently on it, and we do know now the FDA has or will have shortly a new commissioner appointed by the Biden administration, taking over from the interim one that comes about between elections. So look, you can hopefully tell by the tone of this presentation, we're very proud of the the impact we're having, and having on millions of lives around the world. We're very pleased how the commercial team is running in the US and elsewhere, and we look forward to updating you on commercial progress in January. But before then, we'll be publishing some stuff around RSNA in particular. So please do watch out on social media for that, and or our newsletter, which we'll be putting together shortly. With that, I'd like to open the floor to questions, please.
Thank you, Ralph. So again, if you do want to ask a question, please do so using the Q&A facility at the bottom of your screen. While we wait for some of those to come through, we do have some questions that arrived to our inbox prior to the webinar this morning, which I will read off for you now. So can we expect to see the same levels of growth for the rest of the financial year?
Yeah, it's a great question, Hannah. Q1, Q2 are traditionally slow for us because of the US summer. We were very pleasantly surprised by the really strong Q2 we had, and certainly we're looking forward to a strong Q3, Q4. We've got a strong pipeline. The US commercial team is doing an outstanding job, and usually a lot of this stuff is kick-started by RSNA, which of course starts at the end of this week. So yeah, we very much are expecting to see those same levels of growth over this next 6 months.
Okay, thank you. You said earlier on about the additional costs due to the CRA integration, and as that is yet to complete, are there any cost synergies that we can expect to be realised?
Yeah, with both acquisitions, we're always taking a slow and steady approach to them. Let's also note though up front here that CRA is actually cash flow positive. We have managed to get some cost synergies already, and it's been great to see the way the CRA staff are starting to interact with our sales team in particular, because obviously one of the aims is that CRA doesn't need to use their own sales team. We can really amplify their sales efforts for our own, and that's really starting to grow almost on a day-by-day basis now. You can see the coordination coming into the team, which is excellent to see. So yeah, we've managed to do some cost synergies. Obviously, we're not able to recruit new salespeople, new marketing people, and so on. There will be some more cost synergies to come, but nothing really major around that.
Okay, is there an update on Reveal DX's TGA and FDA clearance?
Yeah, both are very much in progress, Hannah, and by both Real DX, Riverain, and all the other lung companies actually spending time with our sales team currently online and getting ready for Chicago. But yeah, they're both in process. We do expect TGA to come quicker than the FDA one, given they've already got CE marking. But that's not stopping us putting some grunt work in now, however, and we are working on getting some Australian luminary sites up and running and starting conversations with the screening organisations around the world. They're just starting to really get going, scoping up how they're going to tackle lung cancer screening, which, as we've indicated before, really is proven now to save a lot of lives.
Okay, so what type of growth can we expect to see from the lung cancer screening market? When do you envisage we actually get to see some of it?
Well, currently lung is about 5% of our overall business today. The deals we've signed with Reveal and Riverain are, as we've indicated before, positioning ourselves for the future as lung cancer screening really starts up globally and these companies go out there and get those regulatory clearances. Our aim really is to replicate in lung what we do in breast. The tech stacks, as we've talked about, are very similar. However, we've got a huge amount of commercial traction on breast in the US, in Australia, in New Zealand and elsewhere around the world. So we're certainly not going to be distracting our sales team too far away from that when there's a huge amount of business to be got. But certainly, yeah, over the next year or towards the end of next year, we do expect to see that lung world start to really increase from where it is today.
When will Natera's genetic testing capabilities be integrated into Volpara and available to Volpara customers?
Yeah, that's a great question. So let's just remind everyone then, we have a couple of products. Patient Hub is our patient tracking tool, and in Patient Hub today, you can populate, print, and then fax what they call a genetics test request form. Now, obviously, Natera is just one of the big companies that we work with. We also work with Ebitda, Ambry, and Myriad. And those Patient Hub generated test request forms can go off to any of those genetics companies. And so yeah, effectively, we can start to offer them today. If a site says to us, yes, actually, I'm very interested in genetics because I want to really catch all these BRCA gene carriers, and our favorite one at this hospital is Natera, then we can do that with our Patient Hub today. Well, what's kind of more interestingly, that's a little bit cumbersome. It involves faxes, which if some of you deal with the US, you'll know it's still in use. We are building electronic, direct electronic interfaces between the CRA cloud and those genetics companies. We've got a couple of those up and running now, and Natera, I think, is probably the next one on the rank. So yeah, certainly we can do it today in kind of paper form at Patient Hub sites. We can do it electronically via CRA. And our aim over the next year or so is to link all that up, so you have the choice at Patient Hub or CRA sites to either print a form and send it off, or just do it electronically. And yeah, we're spending a lot of time again with our sales team now, teaching them about genetics and linking them up with sites up with our experts in that space. And we are starting to see now increased traction around some of the area. So yeah, we're very bullish around the whole emphasis of our year, which was risk and genetics. And yeah, we look forward to seeing how that plays out over the next 6 months.
Okay, thank you. We have two more. Do you expect your net losses to continue decreasing?
Do you want to take that one, Craig?
Yeah, I can take that one, Rolf. Yeah, we've had a good half year. We had signaled to the market that we were going to be investing in our headcount this financial year to try and get it up around about that 200 mark, which we think is a sustainable base for us. We are close to that number. So we do see our cost base stabilizing, and we do see revenue continuing to increase as it has this half year. So we should see at worst a stabilization for the next sort of half year before then continuing to decrease.
Okay, and will you raise money soon?
You'll take that one, Craig?
Yeah, I can take that one as well. As I mentioned earlier, we've got $25 million in the bank account as at the end of September. If you look at the last sort of 6 4Cs, you will have seen a slow but steady decrease in our cash burn, other than the last quarter, but it wasn't materially higher than the others. At the moment, we're focused on growth. We're also focused on managing our costs, and we are focused on continuing to reduce that cash burn rate. So for at least the foreseeable future, there is no need for us to raise capital, but obviously the board and management continue to keep a close eye on it, and if need so, we will, but at the moment that's not on the agenda.
Okay, thank you. And we have one final question from the floor, which is, do you have any comments or feedback on the performance of the share price over the last 3 months?
Yeah, so that's a great question. Yeah, many factors feed into the share price, and we understand some of the some of the institutes have had their kind of mandates changing around, but our focus as a company, obviously we're disappointed on the share price and where it is, but our focus is building one of the most commercially successful and impactful companies in the world in cancer screening. And obviously, as we continue to do that, we firmly believe and are confident that the company value will return closer or above to where it's been in the past, and where our SaaS metrics suggest is reasonable value.
Okay, thank you. There are no other questions at this time. So thank you very much for your time this morning. If anybody does have any further questions, please do send them through by email and we will come back to you very shortly. Again, thank you and have a good day, everybody.
Cool. Thank you.
Thank you.